Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just got a couple of minutes past midday here, making it a couple of minutes past 1100 UTC. A really big shout out to all of you watching this live today, as well as everybody that watches these on catch up as well. So, happy Monday, July the 7th to everyone. Now, we've had some very eventful weeks, and I assume that we will be in for even more fun this week with the markets. So what do we want to do? Well, we want to set out our stall for the week. Now, we want to take a look at this in terms of where are good positions to take trades from, but also what's the market telling us in terms of its approach to the risk profile. So are we still holding risk on environments? How are the equity markets doing? Is the capital flow still there? Do we believe that we're still under or in this throw of bull market conditions that's going to lead to prosperity for risk assets like Bitcoin and cryptocurrency? All right. So we're going to take that today. We're going to decant that down. We're going to take a look at Bitcoin. We're going to take a look at Ethereum. We're going to take a look at Solana and a few of the alts as well. So do let me know if there's anything particularly on your mind that you want me to take a look at. I will try and make some time towards the end of the show. But what I really want to do at the moment is just take that deep dive into the market. Also looking at what we've got coming up from the week in terms of news. Yo, Whack, how are you doing, my friend? So looking at this slightly differently today, and the reason for this is I've been getting some really lovely messages and some great questions from a lot of you from these shows, but also from people who receive our Bitcoin updates. Okay, so I do the Bitcoin report on a Sunday night. Allows me to kind of get out ahead of the market on a Monday, and then I have the meeting with my wonderful analyst team on a Monday evening where we decant what played out on the Monday, what the plans were over the weekend. And then we formulate what we're looking to do to move forward for the week ahead from every level, from fundamental, from news drivers, and obviously technicals as well. So what I wanted to do today was just take a look at this. I had a few questions in terms of regarding the gaps, how I'm looking for these different levels to get involved in the market. So I wanted to start here actually on the 4-hour or the H4 today. Verity Life, good morning to you too as well, my friend. And just say how I set these conditions out. So you'll hear me using this term conditions. It's from prop trading days, or when I used to trade for a fund over in Germany. And basically what you're looking to do is, the conditions are, what do we do when or if X happens? Okay, so I think one of the biggest mistakes people make is they step into the markets immediately just thinking they're bullish and they're looking to buy everything up. Ultimately, people typically over leverage, get hurt, or stick in spot, but kind of buy and sell in the wrong places. It's a little bit of a cliche, I know, but buying low and selling high. A lot of people want to see too much confirmation. And what do I mean by that? Well, a lot of people saying, well, look, I was waiting for the market to get back bullish. I got involved in the market and then price came back and ultimately took me out. So there's a couple of different ways that we look at the market. We're either looking for these kind of confirmation-based setups, all right, or we're looking to attack the market aggressively from key levels. So the difference, or what we would be looking at in both of those respects, are reflected here on the 4-hour chart. Now, the big grey box here, we're going to look at this because we're actually going to backwards rationalize the charts today, all right? Meaning that we're going to go from a daily, the 4 hour to the daily and then back. Now, for some reason, I don't know why, let me just going to reload this because TradingView appears to have crashed. Maybe just too many people excited about the markets today. Here we go. That's better. Okay, so we're going to look at both those scenarios today. And like I said, we're then going to backwards rationalize Bitcoin because ultimately the conditions that we set are what we're looking to play into our trade plan. There is a saying, again, maybe a little bit cliche, but it's very true, which is plan your trade and trade your plan. So as I released last night in the Bitcoin, this 4 hour gap here was my condition. All right. Now, until we closed above this, and actually at the time of writing the report, this candle was live. So I said, this is the situation. It's a bearish gap. Yeah, failure with order pairing coming back to here. The market loves to draw to these areas. Sellers can step back in and ultimately we see rejection. Now, at any key level, at any gap, we're watching how price reacts. Just remember my, rubbish analogies, one being the hot water test, right? So you've got 2 pans of water, one filled with tepid water, the other filled with boiling water, and you're wearing a blindfold. You try to put your hand into the one with tepid water and you can kind of keep your hand in there for a while. Yeah, so what happens here? You keep your hand in there for a while, so price is spending time in here. There's no immediate rejection. If this water was boiling hot, right, then you would touch it and ultimately price would move away very quickly, or your hand would move away very quickly. Let's look at the situation that we had up here, right? So price comes in. This is the part that I'm talking about up here. What do? Well, this thick red line is the prior all-time high. Okay, always significant levels. All right, we saw a lot of selling take place at that level. So when we get back there, we want to pay attention. And then we want to look for local liquidity as well, right? The local liquidity is in the form of this high. Okay, you're going to have to bear with me. TradingView's being very twitchy today. I'm not really sure why. So what happens? We come and take out this level. Yeah. What about price's engagement with this black line or this red line here, key liquidity pools, tells us that price is getting acceptance above that level? Absolutely nothing. The long downside wicks that we see forming here, yeah, on these candles, are a sign that there's absorption, that there's sellers. And then we need to ask ourselves, who's winning that battle? Yeah. So if we start seeing rejections at these levels, the idea is that if the buying and the intent of the buyers or the value of the item here is considered low and there's great demand for that product, then price ultimately looks to fly through those levels. We look for resistance areas like this to become support, right? For price to come back down and turn this level from one of resistance into support. Well, we didn't see that. We saw some pretty strong rejections coming in here. And then these bearish candles that formed afterwards gave us an indication that price wanted to move lower. Does that mean that everything's over and price is going to zero? Of course it doesn't. Price is dynamic. It's almost like a living, breathing organism, right? It's come up to this area here to try and smash through it, not been able to do so. The buyers weren't strong enough, so price retreats back to a level where it's considered fair value. And at the moment, this is that kind of level. So let's clear this up a little bit and see what we're talking about in terms of our gaps. So the grey box, which we'll go on to in a minute, which is our daily gap, is an area that we look for support. Price has ultimately come and taken out a high, so we look for it to search for the next point of liquidity. In this case, it's this gap. Now, when price is down in this gap here, we've created a lower time frame 4 hour gap here, which is bearish. So again, hot water test. If we expect this to really reject hard and move lower, we would expect it to reject pretty quickly. Here's another good example of that, right? Price coming into this order block or this area of demand, taking out these lows. Look how quickly it recovers it. Yeah. If we were to just draw a rough kind of support resistance area here, yeah, with just what we've got on the screen, you can see price wicking into here, resistance, still resistance here, closes above, retest holds, retest holds, retest holds. Actually get a nice buy off the back of that. But then look what happens here. Price really carves through this area. So that's not a great time to be a seller. All right. You want to be a seller from key points of rejection, price taking out these highs, coming back down, inverting this gap, setting this bearish order block, right? There's plenty of areas in here to be involved for short-term short plays, all right? But with bullish market structure and bullish conditions, what we're looking for here is for price to sweep out this level And then we want to see this area act as resistance, yeah, like it did back here. And it ultimately doesn't do that. Look how quickly it recovers it. So this has just put a massive squeeze on late shorts. Yeah, it's also come down to a key area that's allowed buyers to get back involved here. And then you get these very large aggressive expansions. So why is that important? Well, we didn't see that kind of rejection in here. So the conditions for me are really, really simple at the moment. We had a bearish gap when we close above that gap. So this should be rejecting price. It doesn't. We close above it, meaning we violated it. It becomes an inversion gap. All right. And you'll see those as purple on my charts. So what we've got here is an inversion gap, which should offer support, sat within a daily bullish gap, which should also offer support. So the playbook for today is quite simple. Price pulling back to this area here on Bitcoin. This is the area we're going to look to get involved in some long setups. Looking for that nice clean retest. Price has spent a little bit of time outside of this now as well. There's not really much, in my opinion, that should be rejecting price in here until we get back to, obviously, the key level, which is the prior all-time high at 109,998.9 here on OKX. But also this swing high, you can see a very aggressive move up into this, all right, which is 110,500 flat. All right, and then we've got equal highs resting up here as well, or relative equal highs, flat highs, okay, areas that the market tends to gravitate towards in terms of liquidity. So on Bitcoin, it's really quite simple. Price holding this level, looking for long setups higher. The caveat here is I want to see news drivers and equity markets play along. Now, we're in a very news and fundamentally driven environment at the moment, meaning that a single headline tweet from the right or wrong kind of people can change things very, very quickly. So we have to factor that in. But we also can't completely allow for it because we can't necessarily predict it. So we can only do what's in front of us. For me to become bearish here, I would need to see price closing below the 4-hour gap, but also the daily. And the issue that I've got with that, I would need a daily close below this gap and this low, because there's a chance that price could come back down, look like it's about to side through this gap, take this low, and have this kind of reaction here, where we see the buyers stepping in aggressively after inducing shorts. However, we also need to be aware that we've gone from a higher high to a higher low to a lower high, and a break of this level would represent a 4-hour break of market structure. Okay, so lots to consider. Intraday plays for me today, looking for longs down from this area here. Anything kind of moving a little bit lower, I'm not interested in shorting this today, not unless we get some major catalysts come in terms of news. And even then, by the time they play out, we still need to be very, very cautious, because the chances are that we're already late to the move. So let me backwards rationalize this for you. Let's move to the daily. Okay, so here's our daily analysis. Nice and simple, really. We can also see the weekly gap down here on the chart, which was the key level we were targeting, looking for a reaction. Again, look and monitor how price steps in. I think a lot of people misuse technical analysis, and especially candlesticks, you know, really kind of overlooking the fact of what they tell you and what they can teach you. When price is coming into any key levels, like look what happened here. Really large, yeah, body coming down into this, but then the wick hits this level and gets bought up quite nicely. Secondary candles really nice and bullish. Yeah, so where are the sellers? You know, where are the sellers here? Maybe coming into the base of this area of supply, this order block in here. But then when we really start closing a decent body candle into here, we really need to start looking, for higher targets. So on a daily scale, let's forget about what happened previously. Let's look at what's happening now. We've got all the liquidity stacked above. That is going to provide strong resistance, all right? We've seen key selling taking place in all of these areas, all right? Resistance, 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 resistance again. Now, like I said, on a daily scale, I need to see a close below. And when I say this, I mean, like when I say a strong close, I want to see like a big bodied candle. Like look at something like this. Right? It doesn't have to be that, maybe an extreme example, but look, price comes up and then closes above the prior all-time high. That's quite bullish. We wait here for our opportunity to get involved, which is price drawing back down into this bullish gap. So we then look for long setups. When that then gets violated, it gives us information. It tells us that the market's not ready to accept that as fair value yet, and that ultimately it's going to move back down to a point that was previously considered fair value, whether you're somebody that looks for these consolidations before the pumps, because that's when the buyers really kind of held control of the market, or just looking for those key liquidity pools, yeah, where enough liquidity can be triggered for larger players to step in the market, take the bid, and ultimately send price higher. So bullish on this instrument until we close below here. if and when. Okay, if we do close below there, sorry, then I'm targeting this low here, and we also have this untapped daily gap. Now, it's not the cleanest in the world, but if we look at the Fibonacci leg here as well, we can see that the daily gap here is just below the 0.5, and the golden pocket is sat below here as well. Now, you know, we've seen a large expansion here. You know, we were looking at this you know, when price kind of came into this high here as well, and then it just kept pushing up. Then we kind of set this high, and we had this very small corrective move just down to the 236. So the trend was showing a lot of strength at that stage, all right, but ultimately we've come into a whole pile of resistance above us. Now, key things to factor in here is, what are the equity markets doing? And when I say the equity markets, my focus is mostly on the indexes or the indices, the NASDAQ, the S&P 500, the Dow Jones, right? Okay, also here on the Magnificent Seven, right? That's Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla, because it gives me a lot of information on what the key drivers or the biggest, you know, catalysts, especially in recent times, behind things like the S&P 500 and the NASDAQ are. Now, these obviously don't start today, my time, until 2:30 when we have the US market open. That's not the pre-market open. Obviously, you can change and trade equities in forms of indexes and stuff like that. But for these, we're actually waiting, they're US companies, so we're waiting for the US market to open, which is in just over a couple of hours from now. Now, what's quite interesting at the moment is we've seen the impact from Asia in the overnight sessions here on the NASDAQ. And, you know, here on the daily, obviously, it looks very, very minimal. We'll just wait for TradingView to catch up. There we go. So on the daily here, we can see it looks pretty minimal, right? But when we look over here, we can see our risk asset basket here of the NASDAQ, S&P 500, and the Dow Jones. They're very, very highly correlated, by the way, are all down. And then we look at our risk off basket, where we take a close look at the DXY, the VIX, which is the volatility index that's measuring how many puts, or basically think of it this way, how many short option calls are being taken out on the S&P 500. So it shows people actively shorting the index on the options market. So think of it like a fear index, really, for risk. So this is slightly heightened today, but at 17.62 is still well below the 20 mark, which is where we become quite cautious with risk assets if it starts to spike up above that. Gold has kind of been its own animal lately a little bit, right? It's been so very strong, underpinned by the economic environment, the macro scene, as well as obviously the geopolitical landscape as well. But ultimately, what we want to see on a good day for risk is, you know, equities or the index is green, and things like the dollar, the volatility index down, and ideally gold as well. It shows us that those kind of historical safe havens are cooling off, meaning that the risk market can breathe a little bit. The other thing I tend to look at are things like this Aussie JPY, right? It's Australian dollar versus the yen, New Zealand dollar versus the yen. Typically risk baskets like that. If the market's feeling a little bit friskier towards risk, we'll invest in higher return currencies like the Aussie and New Zealand dollar versus the Japanese yen, which is a very much a safe haven currency. All right. So at the moment, for the intraday, for the start week perspective, it's a little bit flat, pointing a little bit risk off, but we have to contextualize that. It's the start of the week, and that's more factoring in the immediacy of what's happening across the day. If we look at the NASDAQ here, we can see that it's still absolutely melting faces. Okay, so something I'm going to do here is just pop on the moving averages. Okay, just so that you can see what I've got on here. I've got the 100, the 50, and the 20. Okay, and you can just pop onto this one here. I just use the triple MA here, right, which is just the SMA. But you can do it with individual ones as well, because I do track, obviously, the EMAs, the exponential moving averages. Shy, good morning, my friend. How are you doing? So what we can see here is the 20 has just been an animal here on price right now. What we want to see with the moving averages, typically, if you're a good exponent of this, and one of the best I've ever seen is this wonderful woman on Twitter, or lady on Twitter, called Dentoshi. She's an exceptional user of moving averages, right? And really, I'm a much more simple creature when it comes to these, although I've built many trading systems around these and I still use them to trade legacy markets and stocks. What I'm looking for here is for price to just be in a strong trend, right? And what I'll also do more often than not, especially with stocks, is add the 200 period moving average, which is down here. Now, notice how these are all decently apart. You have to apologize because I've got both of these in purple. But that's the 100 and that's the 200. Look how they're all in order. Shortest first, 20, 50, 100, 200. Really nice fanning out, yeah? and then it's pushing higher. Then look what happens when the 20s, the first one to give you the indication that things are starting to roll over a little bit here. Okay. As that comes down, price kind of moves into this area, it starts to squash, but then it starts to expand again here, right? You can see how it starts to support price and push price higher. But ultimately, look how we're stopping getting those really nice kind of big bounces, big bounce, smaller bounce. Then a real nice recovery here, right? But then notice how the moves between the highs and the lows just become less as price is really, really kind of struggling to take that on. We can add volume into the mix here as well, but we'll cover that a little bit later. So when price comes into these areas, unless you're looking to be an active shorter of the markets, in which case this was the place to do it, when everything started to compress and then trend the other way, obviously the 200 is a very, very late mover to this because it's the longest period moving average that we have, which is why I actually prefer to use the 100 more often than not, right? But now we can just see, how vertical this has been, right? Look at what happens with the 20. The 20 comes back down, price gets back above, holds this area, and then really looks to push up. Shadow XBT, hello, mate. Good morning to you. Shay, you got my name right. Awesome. It's not usually my forte, Shay, to be honest. Normally, I'm absolutely murdering people's names, unfortunately. But I'm really, really happy that I got that right. Yeah, look, I think if you look here at the NASDAQ, right, ultimately, what I'm always trying to gauge on the markets is how sustainable is the trend, first of all, but also the information and the economic landscape. Ultimately, I see this as it's been a very, very confused cycle. Of course, it has. We've had just some really major and strange catalysts going on. Everything from obviously, Trump being super pro crypto, but then coming in and really kind of decimating the space quite badly, allowing a lot of bad actors, including himself, to come into that and kind of shill a lot of projects. We've got a mass oversaturation in the altcoin markets as well. But quietly, while all this has been going on, the NASDAQ and the S&P 500 have just been cruising to new all-time highs, showing a lot of promise. And, ultimately, overall, I know a lot of people kind of disagree with this, but if you look at it factually, Bitcoin acts as a risk asset, all right? It's not this kind of, store of wealth or, that people want it to be just yet. Unfortunately, people looking at it to become that digital gold, right? To become that hedge. It's just not really there for me at the moment. The correlation's incredibly, incredibly strong between the NASDAQ, S&P 500 and Bitcoin, for example. And so at the moment, that's a good thing, though. Looking at this from a kind of moral perspective, or however you would like to say, or what you want to see from it, the future of it, the good that it can do for the world, the way it can help reshape finance. Versus whether you're just trading these things because you want to make some money on it and you don't really care what the instrument is or what the ticker is. But if what's good for the NASDAQ is good for Bitcoin, then this is really what we want to see. Okay, now if we're going to move down to a 4-hour, we can really see, and I really encourage people to use moving averages, especially if you're starting out in this, because it can just really help relieve a lot of tension, right? So for example, or not tension, but confusion now, right? So let's just excuse to a bit of data left on here, right? So let's just look as prices are kind of coming into this, see how kind of squashed everything is. Yeah, there's not really. I would say that if we draw it all the way back to here, this is when we really first got the clarity. And I'm talking about looking at this area of the screen here. We've got the 100, the 50, and the 20. Look how they're all apart and really fanning out, looking to move higher. So all you're doing is you're looking at reactions here. Drops in, but a really nice strong reaction. This is where volume can be helpful sometimes as well, as we look in here. Yeah. So you just start to see the bullish volume starting to tick back up here, and then price gets back up. And then you're kind of saying, okay, you just want to see this support. You want to see it continue to kind of fan up. Just move that out a little bit so you guys can see. Yeah, and you can see the strength in this when price is coming down. Look at the long downside wicks. You're seeing absorption. You're seeing buyers step in when we get back down to these key levels, especially if we take out any form of liquidity. So as price is moving up like this and it's trending, then what I'm looking for here for these down close candles, the bearish candles, to be respected. When we start closing above these, you want to see them used as support. We then start to see some long upside wicks coming in here, really starting to show that sellers are taking over. Then we close below the 20. So then I'm kind of sidelined then in terms of trend plays. I then need to see price back above it. So I'd be looking to get bullish around about here until obviously we have this large candle comes back down. No problem, because then we just stay flat, yeah, until you start to see these get back into order and you start to see these moves, and then you just look for how price reacts at them. Yeah, does it manage to hold them together? Are the moving averages staying fanned out? Are the buyers here? Now, a friend of mine, and just a magnificent traditional market trader and a great voice in the space, a guy called David Bell who runs Think Money, and they've got a wonderful course over there teaching you all of this stuff in terms of traditional markets, how he's worked for some of the biggest banks in the world, funds and bits and pieces, as well as an advisor. And we often talk about, the beauty and simplicity of moving averages. Because if you think of it like this, a lot of people don't want to short markets, right? I'm more than happy to do it. I really enjoy shorting markets, not because of any other reason than it seems to speak to me really clearly when we're getting exhaustion. I will use things like moving averages and that to really kind of establish when we're in strong trends. But looking at exhaustion at highs, just something about that speaks to me. It has done my whole career, right? So you play to your strengths ultimately. But what David's perspective is, and I really respect this, and he's a wonderful person. You really should give him a follow on Twitter. If you want me to pop it on there, I'll find his Twitter handle so you can go and check him out. Outspoken guy, very, very smart, a real gem of a find. But what he's talking about is basically, there's pretty much always something in a bull market if you kind of live your life outside of cryptocurrency, right? Meaning that in bearish market conditions, you see defensive stocks come alive. You see the metals, you see gold and stuff like that start to catch up as money moves into safe havens. You see bonds starting to pick up as well. So, if you can just always find out what's trending, what's bullish and what's in a strong uptrend, then you have a better job, but you have an easier job, because you are buying into strength. That's the best thing to do, right? The trend is your friend until the end, right? I can't remember. It's a phrase that gets thrown around a lot, right? But something I always heard in the industry. So, ultimately you can stay in these kind of areas of chop, but you need to be very, very comfortable with trading liquidity, right? Finding moves at these key kind of areas, deviation, price getting back underneath, understanding where the market's most likely to head to next in terms of gaps, liquidity at the lows, watching for prices reaction. I love stuff like that, right? But I appreciate it's not everybody's cup of tea. So here we can see the 20 period moving average moving under the 50, but then we see a really strong recovery over it. So ultimately we're just looking for price to tip its hat and say, okay, look at this. Yeah, look how that 20's now recovered that. It's moving up really strongly. These are all fanning out back into shape. So as long as these hold, remember the rule. We're looking for the bearish candles. Yeah. So the down close candles, as I would call them, or just black candles on these will be red on most people's charts. Yeah. Price closes above it, sets the order block, we look higher, right? Same with this one, right? Price closes above these, price closes above these, price closes above this one here, right? And you're just following it up. You're following it up until it gives you a reason to not do it. And where does it give you that reason? Well, we go from here, supporting the bearish candles. Oh, again, this one here, close above it. So we're looking to long. Then this one here, close above it. But then look how quickly price does the opposite. Price now closes below the bullish candles here, telling us to be cautious. Also closes under the 200 period moving average, telling us to be cautious. When do we want to step back in? Well, we've set a new bullish order block here, or confirm this area as demand. Price has now closed above here, and we're back above the 20 period moving average. So we're back in, right? So we can make these things a little bit simpler for ourselves by kind of understanding trend. Now, why is that important? Well, it's important for a number of reasons, but none more so than the fact that we're obviously still in an absolute banger of an uptrend in equity markets, right? So sometimes you don't need to listen to all the doom and gloom in the space. Believe me, I have it every single day. I spend probably 12 to 15 hours a day in these markets, at least 5 days a week. And I study a lot of weekends, and I have a lot of meetings, and I travel a lot to speak with some of the best minds in the whole industry, and I'm very, very blessed in that respect. But ultimately, your job as a trader is to make money, and you want to be doing that in the best and most efficient way possible, and that's often sticking to trends. All right, so why does this matter? Well, look, we're clearly in a strong uptrend here on the Nasdaq. If you are someone that's saying, look, BC, this is all well and good, mate, but I am 100% crypto, I don't know how to touch traditional markets, or maybe it's not even legal, or maybe there's restrictions in the country you're from, right? So why should I bother about this? Well, you don't need to trade this. Just need to understand that if this is looking good, then the chances are, if we overlay the Bitcoin chart on here, and we get this to line up with that, what I'm going to do here is I'm just going to turn the moving averages off. I'm going to make this into a line chart as well. Yeah. So you kind of get the idea here, right? If we kind of make these and you overlay these, you can see what's good for the NASDAQ is pretty good for Bitcoin, right? Of course, it's not completely perfect, like nothing in trading is. But look at these. You had a period of decoupling here around kind of May time, all right, when we saw, price ultimately rallying back up into this, right? But we saw a lot more strength here in equities than we did in crypto. But apart from that, they're pretty well correlated. All right. Price coming down here, price matching it here, price moving up here. Obviously, the NASDAQ leading the way here. And while some of these dips here might be a little bit more extreme on Bitcoin because it's acting more as a beta risk asset, we can ultimately see overall, the purpose of this. So just by sticking a couple of moving averages on the NASDAQ, taking a look at the DXY, and doing a few other really simple things can give you just a little bit of a feel for what the market's like in terms of risk. Okay, so basically we want to start to see these chill out a little bit. We want to see the VIX flattening out, starting to come back down. DXY as well, although there are slightly different drivers behind the dollar at the moment. Jesse, good morning, mate. And then, any uptick here in Aussie or New Zealand JPY. And then we've kind of got that little balance. We're saying, okay, markets flowing with risk is still going well. So let's just very quickly look at ETH. Yeah. And what we can see here straight away on the 4-hour chart, if we just kind of look at this, is how price has started to make this really nice recovery here, right? Now, remember, moving averages are lagging, meaning that what you see here on the moving averages actually took place, a while back. The 20 periods back, all right? The 50 periods and the 100. So this cross here is actually a lot more to do with what's happened here. We see this real kind of bullish resurgence. So now we want to see these areas holding and starting to trend up. So if I'm looking at the moving averages here on ETH and saying, okay, well, the first thing I want to see here, as I did here when this started trending, I was like, great, okay, coming in Friday. Let's see if we get the retest. This price has scythed through it. And whilst we kind of held this here, remember, you want to see price, or I want to see price above the 20, and I didn't even want to take this long here. I'll tell you for why. On a swing basis, it's very tricky at the moment, but I like to see the averages moving up, right, or down. So here's a good example. This was a really good long in here, yeah. Holding this beautiful bullish gap here. We've got the moving averages in order, but look how the 20 is looking up. Price pops back down to the 20 here. This is the area that I want to look to be a buyer. And even if you wait for the close of this bullish engulfing and the wait for the set of the new order block, you've still got a beautiful intraday play up into these highs and ultimately up to this area of resistance. So on ETH at the moment, that's what I just wanted to say. That's have a play around with that, see if you find it useful or not. Please do feel free to reach out. I can always maybe do an instructional piece on it that I can put on the Twitter account for everybody. So let's turn the moving averages off for a minute and then let's just look at raw price action here with Ethereum. Now we use actually a different chart when we're reviewing these. So these are the ones. This is what's had our attention. And to be honest, it doesn't always happen like this, but every single dart that we've thrown in terms of looking at ETH with this recently has played off really well. So let me just update you a little bit. So with these charts, if you're maybe new to the show, all the TA and everything on these charts remains on the chart. It only gets deleted once we validate or invalidate it on the show so that we clean the chart up. Otherwise, it looks like a Jackson Pollock. So this thick blue line here represents the 50% retracement of this leg down. Yeah. So that's the Fibonacci retracement. And this orange box here represents the golden pocket. All right. So when we came back down here to the higher time frame gap, what were we looking for? Well, quite simply, you can see this was a bearish gap here. What are we looking for? We're looking for absorption. We're looking for that hot water test reaction. Price dips into here, long downside wick, takes out this low, closes above it, inverts this gap. Look how it then uses it. Let me zoom in a bit for you guys, actually. How it uses it perfectly as support here, drives down into this, and then we see price moving higher. Now, we then create a daily gap in here after this expansion, which is what we were looking to take longs from once we take out these equal lows, yeah? And look at how price just literally tickled into this. This was a retracement of this leg, high to low, by the way, and I think we came to about the 236, showing how incredibly strong that trend was. So we're going to delete that now. Right, so dipping to the gap, really strong expansion higher, right? This was an area I was interested in because we closed below this here. So that was then the signal that we chased down these lows here on an intraday basis. Then we look for this area to offer strong resistance. Look how it just carved through it. At that moment, it's game on. So we can delete that now, clean that up. We hit the 50% target, and then the area we were looking for price to struggle, which it often does, is the golden pocket on the Fibonacci. All right. And again, look, we don't just need to rely on the fact that this is the golden pocket. We can look for local liquidity. We can see very clearly the sweep, the swing failure here. Price closes below actually here, the first up close candles, and then price is selling off. Now, it doesn't mean, again, remember this, it doesn't mean that you then have to actively short that. You know, I think psychologically trading is so very good at kind of getting you to take the wrong position, because you want to be long here. You got late to the move. Maybe you got stopped out, or you're seeing this and you're like, God, I'm going to get left behind. You FOMO in all of these things. Terrible, terrible ideas, right? What you really want to be doing is, and I remember this from an old an old pit trader in London who just used to scream at everyone. A friend of mine tells this story much better than I do, but I can't repeat exactly what he would say because it was very, very brutal and there's a lot of swearing involved. But, you know, basically buy when there's blood in the water. Professionals buy when there's blood. And that means that, you know, when price starts to sell off here, people panic and they start to sell their positions off. And educated or, you know, professional traders, what they're doing is looking for price to be a buyer down here, because you're saying, look at how price stepped in here. Look at this expansion. Buyers were really, really strong here. Very rare you see this big up and then immediately retrace. And if you do, you better be looking lower, right? Because just think about it logically. If there's strength here, then you want to see the continuation of that strength, all right? So as price sold off here, we got these beautiful inefficiencies here on the left, yeah? These gaps, great areas to target. And we look at this and look how it just perfectly touched the golden pocket here. So this was a great area to look to be long, because we've seen the initial rejection on the reverse. So this is the higher time frame golden pocket here. We expect price to have a rejection here. But what we really want to see here is a little bit of strength. Yeah. So great opportunity to get involved down here, looking on the lower time frames for either structural shifts or other reasons to obviously take that long position. So, okay, where are we now? Well, I'm not looking at this as being like, oh, it's kind of rejected here again. The liquidity for me is actually up here with this now, because while we've hit the golden pocket here, you know, the sellers were strong here, so we're looking for sellers to be prominent again. But price, you know, and sellers still want to be selling from somewhere. And if this, and I don't mean to offend the higher by saying this, right, but if this relatively insignificant high here, yeah, is going to cause the market to reverse from this point, well, where we need to be careful here is, like we were just kind of looking at with Bitcoin, is if we've got the higher low here, we've got a lower higher, break down below this level here, we lose market structure, and then I think we could be looking to correct deeper. So just quickly moving this to a daily, because we want to extend this across here, because this very much could come back into play here. Yeah, this gap that was barely touched. And again, I'm not saying we're going all the way down here, but, you know, you'd be a fool if you didn't kind of prepare yourself for these things, right? Ultimately, we always want to have two plans, yeah? So like what happened here, really feeling bullish after this, apart from the fact we're obviously, you know, taking new highs, but price expands beautifully here. We get the impulse move higher, leaving us these gaps. I want to be a buyer in these gaps after I saw the long wick coming down into this area here. Then I was really bullish on this. I thought we'd ultimately push up. Then when we failed to materialize that, and then we started to show weakness, remember our theory here with gaps, we want to see those nice strong reactions at those gaps. And the original reaction here was a really, really nice one. Yeah. Price came into this beautiful long wick recovery, and then I'm looking higher. Then we closed outside of it. What does that do? That inverts the gap, remember, as we were looking at before. And then we expect this area to offer resistance. And then look at the rejections here from the wicks. This is how we knew to short the asset. Ultimately, we didn't know it was going to come all the way down to here, but by understanding where the high time frame levels were, then we just start picking off these liquidity pockets, looking at how price reacts until we get that resurgence, right? Until we get that reversal. So for me here, this is a little bit of a tricky place. So we really want to get back above this if we can. Now we do have bearish gaps over here. I'm going to be a little bit less concerned about that if we really show strength to get up here. I'm going to take this off the chart just because it's a little bit obtrusive and we know this area offers resistance anyway. So, you know, we just at the moment, we just have to be a little bit patient here with ETH. We really need to kind of see it settle in. And that's why I quite like utilizing the 4 hour here, because I'm looking at this and saying, is there any form of strong expansion here? Not really. Price is actually being quite respectful in the way it's grinding up. Obviously, we've come off the back of the weekend, which is always a little bit tricky, but very, very similar to Bitcoin. We've got a really nice inversion gap here on the 4 hour. So we want to see this area hold. If we start closing down below this, then yeah, we do have these lows, but ultimately price is going to be pretty weak then at that point. Set a lower high, coming down for a lower low. We would really look for that to then be purging a little bit deeper into here. But again, as long as we hold above these levels, then, you know, realistically, we want to remain bullish. So let's just take a look at Solana as well. So the gap on Solana doing a really, really good job, as is the order block. You know, ultimately, while these hold, we have a similar situation here. Price came back down, held really well, expanded above this. The order block and the gap gave some really nice longs, but they did kind of peter out and come back. So, you know, yes, Jack, yes, as our Polish friends would say, which is, it is what it is. Now, this just screams a little bit of uncertainty for me here, especially for an asset that's been so strong, because we've seen it kind of come in here and just hold this level through, right? But again, look at this. This is a really nice gap reaction because price drives into it, comes back down, and then you just see nice bullish candle here. Not bullish enough necessarily to make you get involved straight away because it's got, you know, wicks high and low. But then you see the expansion set in the order block, and you're like, okay, longs from this area on an intraday basis or short-term swing basis certainly made sense. However, we then kind of failed to gain any momentum there. And towards the end of the week, we just kind of came back to the gap here. We've not taken any form of liquidity from the lows. So the kind of relatively strong move yesterday and then being followed through today, I think is actually quite a positive one. So again, you know, on that time frame, we're definitely bullish here on Solana. And if we overlay this here on the 4 hour, we can see we got this beautiful bullish gap below us. Label that up so we know which one. So we got support from the daily gap. We got a 4 hour gap that's emerged here as well. And at the moment, you know, it is a very, very skinny order block or kind of area of demand. But if we look at that here on the 4 hour order block, price closed above this here and saw a rejection. But then look as price tries to drive back down, tags into this gap here. Nice reaction, beautiful bullish pin bar candle. Now on an intraday basis, yeah, I'd be very, very surprised if price didn't come to take out these equal highs here. And then I just want to see, and I want to just have a real look at how price is reacting now. I think if we start seeing strength above and holding in this level, especially after these wick rejections here, and, you know, an even safer place, I suppose, would be kind of above here. But I think strength holding above here, you know, I think we're pushing towards this daily high here at 159.88. Again, I'd need to see price closing down below this 4 hour gap here before considering being bearish. And that's just a really nice, simple condition. I think those are the very best ones that we want to go in with. If we put our moving averages on here as well, yeah, we can see on the 4 hour, it's not quite where we want it to be, right? Or this kind of sideways chop has led to this kind of going in and out. We now need to see the 20, which is the green one, recover the 50 here, and then we want to see them all kind of. So we would see this. Yeah, this goes underneath it, all trending up nicely, and then that, which is a slower moving average. Then when we have that fanning out here, yeah, returns to these areas are what we're going to be looking for to kind of push this higher. Now on an intraday basis, anybody that's kind of members with us over at the Bird Nest will know that we kind of deploy a moving average strategy for highly trending intraday scalp trades, as well as our kind of regular kind of price action process as well. So it's been quite interesting trading that recently. We had some really nice wins off the back of it last week, although we did unfortunately get stopped out of a really nice winner, still in profit, but we made a couple of our when it really did have a very good run on it. But that is, you know, the nature of trading. So if we ping this off now, I just want to take a very quick look with you guys as well and just cover what news we have coming up for the week ahead. Really, really important to understand this, especially from a point of catalyst, right? So let me share this with you. We're going to pop over on to Forex Factory very quickly. And we've got a few minutes left in the stream after this. So if you do have any charts or any questions, please do just pop them in the comments and I'll take a look at a few before we close off the show. Now, we have had a really, really big couple of weeks in terms of news, right? You know, going back over the last few weeks, we've had the confirmation from the Federal Reserve that they were holding rates. We've obviously had everything that's going on with the job market, okay, which actually last week there was, you know, the preliminary data which came from the private sector, which is the JOLTS. That was horrendous. They were expecting 90,000+, I think, in terms of new jobs, and it was -33. And the market just absorbed that and flew. And then the next day, when the jobs numbers actually came in, along with unemployment, and that includes government bits and pieces, right? So that came in a lot more positive than people thought. And then the market really, really, really took off. Okay. So we need to just, process that as well. And what we can see here is, compared to last week, we have like a relatively benign news week. We focus on the US market because the US is the biggest market in the world. And ultimately, a lot of the other markets, or most of them, are a little bit subservient to that. So that's why we focus on the US. And we're focused on the high impact news here as well. And what we can see is we just trail down. We're all the way through until Wednesday, when we got the FOMC meeting minutes. Until we get anything of real kind of key interest, we got FOMC Waller speaking as well on Thursday, and we do have unemployment claims. So ultimately, if we can get through Monday and we've got that kind of nice hold here, things are looking bullish across the board, we're holding some key levels, there's not really many reasons for us to not push higher, unless, obviously, remember the caveat, we get some Trump tweet or something that comes in. But ultimately, it's looking like a good news week for price to be able to push in. Now, from an intraday perspective, makes it a little bit tricky because the red folder or the high impact news events give us that daily injection of volatility that helps with intraday trading, but we don't really cover that so much on these shows. So looking at this from a more positional perspective, price has, or crypto and risk assets don't really at the moment have any reason to not be running. Okay, so that's what we want to remember, right? We don't want to try and be too clever. We don't want to overthink these things. Ultimately, if it looks good, it looks good. What's good for the goose is good for the gander, right? So let's just take a very quick look at the DXY here as well. So DXY is beautiful range level that we've got here. So this is a very, very, very old range that's been on these charts for about 7 years now, I think. But I'm just looking for strength and weakness in this, right? Now, actually, when price came back down below this level, this retest here, I expected us to head down more towards the kind of 95 levels. Now, not saying this acts in the same way that a technical chart would do. We're looking at this a little bit like we would look at the VIX in terms of levels for weakness, for strength, right? If we get back inside this range and we start to trend back up, and again, we can look here by just easily adding Bitcoin to this chart. Yeah, we can see that it's been a lot more muddled than it has recently, but ultimately this is often a counter correlation, right? So if there's weakness in the DXY, in the dollar index, which is the dollar measured against a basket of other currencies that's heavier weighted towards the euro, then it's normally quite good for risk assets. Yes, you see Bitcoin and you would see things like the NASDAQ doing quite well. However, in the current environments, we've also seen this correlation dip in and out quite aggressively, and all correlations do over time. Otherwise, what you would do is you would wake up, you'd be like, oh, dollar's going down, I'll just long risk assets. It just, unfortunately, obviously, it's not quite that simple. But typically, you want to see weakness in the dollar here to then start seeing strength in risk assets. But the reason that it's a little bit muddled at the moment are the key drivers behind the dollar, for example, the United States, as well as a lot of other factors that are plugging in. However, we can see here at the moment, the dollar has had a little bit of a resurgence down here. So we do want to be a little bit cautious towards risk, but it certainly wouldn't be enough here to put me off, taking those trades if the technical levels stack up. The other thing here as well that I've talked about a lot on the show, so really should touch upon that before we kind of close up for the day, is looking at the volatility index. All right, so this is the magic 20 level. We really want to see price below these here. These large spikes up above it normally, have a pretty negative impact on risk assets. Yeah, so look at this spike above here. Before that, price really coming up nicely here on Bitcoin, and then the spike above here on the VIX really kind of sends price down. You see it when price gets back above here, price back down below the 20 here. We can see price then, it's really dipping down. Again, we want to see this kind of falling down, showing us that there isn't that amount of fear in terms of longing the risk assets, if you want to think of it in its simplest form. And then as price is really kind of coming down, we get that progress again. We see here as it starts to spike up, price starts to sell off. All right. And again, look, when we came back above this area here, if we just throw a box over this whole bit, when price is kind of above it, and it does kind of tweak in and out here, but you can see when it's above it here, price really selling off, price gets back down below, price pops up, price spikes here on the VIX, and we see the sell-off here as it holds above the 20 level. So this is what we're watching for. And again, it's another thing that looks quite positive for risk. The VIX is all the way down here at like 17 at the moment. So there's no reason to think, unless we start to see those strong spikes up, that the risk bid isn't being underpinned. So that's another good sign here for crypto as well, in my opinion. Again, we're just going to finish off here on Bitcoin very quickly. So as we're looking at that here, just a reminder, in terms of, none of this obviously constitutes as financial advice. This is just my ramblings for how I approach the market and how I've built my career as a trader, right? This level here for me at the moment is just all I'm interested in. Intraday perspective, building this up to start attacking these highs. We need a daily close below these levels here, and one with some real strength before I would look to then consider shorting the markets, which would most likely only be on an intraday basis and would be shown with great caution. We just need to be careful if we start taking out these levels here, because then we do start to lose structure. Obviously, only on the 4 hour. If we just zoom out just a little bit, we can see obviously the daily looking really nice and healthy here as well. The other thing that we can do here is we can put our volume profile across here. I can't quite do that. And then we can see at the moment we're still above the value area high. So typically when price holds these kind of areas, we're looking for progress high. We saw a similar thing here, although obviously the volume profile would have looked a little bit different. You can also see these kind of support shelves here. If we just draw out, see this kind of these high volume nodes here. If we draw that out across at its kind of peak, I'm just going to do this in this color here. Yeah, you can see this offering a really nice kind of shelf here, right? From what's gone from resistance, price is now above this, holding as support. So I don't really need to convince myself much more that things are looking relatively bullish here. But at the same time, we've lost a little bit of momentum. We are just starting to range around here. So I'm using the 4 hour as my right kind of real key confluence here to say, okay, let's start holding above some of these levels. Again, it's not the cleanest in the world, but if we looked at the resistance that we had all the way through here, yeah, resistance, big sell-off, big pump, big close above it, retested support, price pumps up, drops back down below, inducing shorts, like we said, just into a big daily gap. There's your deviation. Price ground its way back up, and now this is the pop. One thing I would say is I would have liked to have seen some displacement on this move. Like with this, see where you start to get the gapping, it shows you there's a real strength of buyers stepping in there. And from a volume perspective, the other thing that I'm very much aware of here is that volume is fading. All right, now the selling volume isn't exactly stepping in either, but if we just take a line along here and we go, okay, well, is this working its way up or is it working its way down? I think we can all agree that this is declining volume here from the buyers. So decent pump, red candle there, which is fine, a little bit of consolidation, but then look how lower volume, and now we're starting to sell off, right? The opposite of what we saw here when you see that rising buy volume, all right? And typically what you want to see before that is the selling volume drop away, showing you that the sellers are getting absorbed, the buyers are stepping in. All right, so we're going to keep an eye on this level here. This is what I want to see hold. I think this is a good area to potentially step into some long positions on an intraday basis or very short-term swing basis. And then we're going to reassess what the plans are taking place on Wednesday. If you do or are interested in what we do over at the Bird Nest and would like to come over and trade with myself and the team over there, then you can do so. You can find a link down in the description below. You can reach out to me on Twitter as well, right? So please don't forget, you can follow me at BC_Richfield. And one more thing to share with you, something you can do. There's tons of free resources as well, guys. Yes, we are a paid community because we're a community of professional traders that have an exceptional track record of the calls that we make and the education that we provide, all right, as well as, the gem hunting, the fundamental work, the news, and the education that goes in over there, right? But I know paid groups aren't for everyone, although do keep an eye on it. I think we've got some really good summer sales about to come up. But if it's not for you, then make the most of the free resources. I post a lot on Twitter, so does the Bird Nest. But this is the website, right? This is all live data from our calls, yeah, which members get access to live, and we put them on here for you to see the the prior month's performance, all right? So we can see that we've got June on here at the moment. You can access the stats for the rest of the year as well. We can see as we came in here, we managed 38 calls, win rate of 78.95%, total profit in percentage was 521. profit per call, average calls per day, average risk to reward on each trade, total risk to reward at 46.78R is nothing to sniff at. If your risk is, say, $100, meaning that you're happy to lose $100 on your trade, then you could have stood to make $4,678 last month alone. And this is a little baby of my own where we're doing kind of intraday trading as well with members. Burnside, my man, how you doing? MBA Young Believe, my friend. Erica, how are you doing? How are we all doing? So yeah, you can find all of that over at the website here as well. You can take a look at the cumulative profit in the table, the risk to reward as well as actually looking at all the different calls we made. You can look at all the data, how it's broken down from long and short perspective as well, why the team are positioned where they are. Ultimately, we really want members to learn from that. We provide the calls. If you choose to, you can copy those calls, right? And make some money. But the whole idea is that you're in there making some money, while you learn. Don't just be reliant on other people, for Christ's sake, because you'll never make it. Now, talking just very quickly on the free information that we have on here as well, you've got things like the crypto breadth charts as well. Our wonderful trader, or part of my amazing team over there, and just an all-round tech wizard, Razoon, right, puts these together for us all the time. It's taking all the live data. It's looking at the amount of assets above their 200-day, simple moving average, the 20-day and the 50-day. The idea being that in the real kind of strongest periods, as we kind of look back here, all of these assets being above the 200, look how this then just keeps going up and up and up and up and up. You then overlay that with the 50, you overlay that with the 20, and it gives you an idea of the strength of the market here, right? The other thing that you've got through here is the crypto screener. This is really, really, really helpful. Now, we can take a look down here. We've got weekly, daily, and 4 hour. It tells us whether we're bullish or bearish. There he is, my man. I didn't even know he was on here, actually, but this is the Razoon that I'm talking about. Wonderful trader and brilliant putting all of this stuff together for us. But what you can see on here, the screen is really helpful. So you go on the day and you're just like, right, okay, crypto's running hot. You haven't had a chance to get in, but you've got a good understanding of the narrative behind what you want to do. So you go on here and you say to yourself, all right, well, what's performing really well? Well, we can see on here Bitcoin and Ethereum, bullish on the weekly, bullish on the daily, bullish on the 4 hour. That's great, yeah. But then you might want to look down the chart and go like, okay, well, let's see what's bullish on the weekly and the daily, but maybe bearish on the 4 hour. So why would I be looking for that? Well, quite simply, bearish on the 4 hour could be the pullback we're looking for. It could be the dip that we want to buy. All right. So you can either look to just play strength, look for these assets, Floki. Wonderful people over at Floki. We've been working with them for a long, long time. It's such an amazing community and company, pivoting all the way from meme to utilities, the stuff they do in the space. Not surprised to see them bullish across the board. But you can take a look at these assets and then you can plug that into your thinking. Okay, so what are we looking at down here? Okay, TRX, yeah, Tron, really nice and bullish. I can get myself onto the TRX chart and I can say, okay, where can I look? Where are my levels? Where can I look to take some entries? The other thing that we can go on here, and I love this, I've used this for a long, long, long time in traditional markets, but is the heat map. Just zoom out, take a look at the moment what crypto's doing. Overall, there's a lot of green on that board, right? So that's a really, really good sign. Then what we can do is we can go onto the stock heat map as well, right? And we can see at the moment the stock heat map's about the same. A lot of green on here. There's a lot of grey, which is kind of either minimum down, minimum up, a little bit of red down here as well. But actually overall, and one of the great things here, you can zoom in, you can zoom out, you can change which one you want to look at as well. Do you want to look at the S&P 500? Do you want to be more focused on the NASDAQ, etc.? So again, we're always just painting these pictures. This is all available for free. And if you're new to the space as well, we've got these brilliant resources. You can sign up for the free newsletter. It's an absolute no-brainer. It's packed full of resources, good information, TA, calls, bits and pieces, as well as reviews of some really exceptional companies. But if you're new, this section is just brilliant, right? birdnest.com/infographics. You've got all of these stuff. So if you're trying to learn a little bit more about candlestick patterns, really, really helpful, quick little cheat sheets that you can have. All right, if you want to know about divergences, which is a massive part of how I certainly trade on the higher time frames, you can see here, so you can start spotting these things for yourself. And it's just a handy little thing that you can always pull up as well, how to write trading plans, right? How, facts about descending triangles, how to spot patterns in markets, right? Risk management, which is, I know it's not the sexy part of it, but my God, is it so important, all right? Yeah, DP, it's not a bad suggestion, actually. It's something that we used to do as well, and I think not a bad idea to kind of bring that back. Ultimately, we want to give people the experience of being able to come in and be part of the community over there. So yeah, I think it's a fair point and a good idea, something I'll certainly put across to the team. ultimately the buck doesn't stop with me here, but I do like it as a plan. And for any of you that can't see DP suggesting here that we do, an intake, we do a free trial. Typically what we do is we open the nest over times of, well, not at different times when we had the major crashes and stuff like that. I think we opened the nest for free for everyone for several months so people could come in and really look to start and rebuild. And we got, a lot of really, really good people came in and did a lot of good things off of that, right? But I think it's a really good suggestion. Ultimately, whether it's one for you or not, we do a 7-day free trial. Hopefully you come in, really make the most of that. Try and take them on at a time where you've got, enough time to really immerse yourself in it. Come in, ask a lot of questions, be very active, really make the most of it in there. And we're always, really open to your suggestions. Anyway, guys, we've just ticked 1 minute over the show now, which isn't bad for me, actually. Normally waffle on for a lot longer than that. But thank you all very much for joining. It's always a pleasure to be here live with you guys. I'm going to be back here on Wednesday as well at the same time. And we're going to rip through and take a look at how the markets have performed since then. Do trade safe. If you do want to find anything more about it, you can find that down in the description. If not, I look forward to seeing all of you legends again on Wednesday at 1100 UTC. Have a fantastic week ahead, everyone, and I look forward to seeing you all around the nest.